All we're trying to do is we want you to be in a position where you are the bank. Okay, this is key. This is why we talk about the private reserve strategy. Because right now, if you're buying a house or if you're buying a real estate investment, who do you go to? You go to the bank. If you're buying let's say credit, who do you go to? You go to the bank. If you need to finance a car, who do you go to? You go to the bank. Taxes, you don't control that piece. The government does, right? So we're trying to put you in a position where you have control of your money. And this is why we're going through this process, right? We want you to understand that there's a way to put you in control of your money so that when you need real estate, when you need credit, when you need to pay for taxes, when you need to finance a car, you don't have to go to the bank anymore. You can access that, you can take control. Now you are the bank, okay? That's the whole point of this illustration. This is a very, very important piece. And the way I usually, this is kind of like an analogy that we use. Tic-tac-toe. The first time you ever played this game, who won? Obviously, the person that taught you the game, because you didn't know the rules. The first time you've ever played it, you lost the game. The person that taught you won the game. And there's a reason for that. The reason is they know the rules. So if you're playing this game, right? If you're playing this game, there we go. Who wins? When you understand the rules, nobody wins. Okay? We're trying to get you to a position where nobody wins. If nobody wins, the financial institutions don't win, you don't win. It's a net positive in your pocket because now you're not giving your money. You get to keep most and majority of your money. It stays with you. So the whole point of this is to show you that the rules, if you know the rules, nobody wins. The banks don't win, you don't win, but it's a net positive for you because now you're not giving away your money anymore. You get to keep that money and keep the opportunity cost that money could have earned for you. So again, going back to this pie, this is where most financial advisors focus, right? They focus on investments. Now, savings and investment, great, but what comes with it? It comes with more risk, okay? So whenever we discuss this with people, the analogy that we use is a golf analogy, okay? Have you ever played golf? So let's say there's a scenario where you get a ticket to the Masters and it says, hey, you've been invited to the Masters. You can only pick one or two things. You can either pick the best clubs in the world, or you can get Tiger Woods skills. Which one would you pick? Of course you would pick Tiger Woods skills. I could go to Walmart, get the Walmart clubs, and then play in the Masters, and I'm still gonna do good because I know the process. This is why we focus so much on process instead of the product. The products are the clubs. I can give you the best products in the world. If you do not know how to use these products, then you're not gonna be efficient with your money. Okay, you're not going to be efficient with your money. So this is why we focus so much on process. Once you understand the process and the best way, the most efficient way to use the products, then we can talk about it. But before that, we have to focus on the process. Best products, doesn't matter. If you don't know how to use it, then you're going to be horrible with it. You're not going to be efficient with it.